Now we will see the question discussion of declaration of dividend. Dividend chapter. So we will first see the practice question in the dividend chapter. Dividend declared in past 3 years. Rate of dividend: year 1 10%, year 2 12%, year 3 11%. Current years the company incurred loss of 15. Further information: paid up capital 100, details of free reserves, that is general reserve is 40, P&L surplus, that is P&L credit balance is 10. In the current year the company's director wants to propose final dividend. They approach your advice. See, current year the company incurred loss, so current year loss. So dividend can be declared either by P&L surplus or reserve. So now current year loss is how much? Current year loss is 15. So current year loss, if it's 15, then P&L balance at the end will become, they have a positive of 10 minus 15. So P&L balance will become negative 5. This P&L balance is negative 5. This should not be adjusted with the general reserve because P&L is different, general reserve is different. So general reserve has a positive balance of 40. Now from the 40 we can declare dividend. So since there is no current year's profit or P&L surplus, we have to go for declaration and payment of dividend through reserve rules. So reserve, first rule, rate rule. What is the rate? The rate is average of 3 years, that is 12 plus 10 plus 11. So it is 11%. Then second rule is withdrawal rule. So how much we can withdraw? 1/10 of paid up capital and free reserves. 1/10 of paid up capital is equal to 100 plus free reserve is 40. Because the negative 5 should not be adjusted. So 1/10 of, so 140 is equal to 14. So 14 rupees is available for withdrawing, but 11% only dividend can be declared. That means 11% on 100 is equal to 11 rupees. So 11 rupees dividend can be declared, but 14 rupees is available for withdrawal. So withdraw only 11 rupees. So withdraw only 11 rupees. So as per the usage rule, third rule, after withdrawal the amount should be first used for current year loss adjustment. So 11 minus 5, because current year loss we are having, 11 minus 5 is equal to 6. So 6 rupees only you can pay dividend. Then fourth rule, balance rule, is to check the balance and reserve. So actually the reserve is 40 minus we are withdrawing 11. So the balance is 29, which is greater than 15% of paid up capital, that is 15%, 15. So 40 minus 11, 29 is there. 15% of 100 is equal to 15. So 29 is greater than 15. Hence the dividend can be declared. So people may have a confusion. Sir, why to take 11 and adjust this minus 5? Instead take 14 and adjust. No. See, prudently we have to take only the least of these two. Then we will go to back questions. Can shareholder in AGM recommend higher rate of dividend than what it is recommended by the board? The shareholder cannot increase or decrease, so no modification is possible. So they cannot increase nor they cannot decrease. See, many authors will write they can not increase but they can decrease as per regulation number 80 of table F of schedule 1. but that reduction is possible only in case we are declaring dividend through payment of capital, that is interest out of capital, as per section 208 of the Companies Act 1996, which I have explained in detail that time. So section 208 of the Companies Act 1996, which says payment of interest out of capital, only 4% can be paid with central government approval. So if more than 4% is proposed, then it can be reduced. Then question number 2, can a company transfer any percentage of profit to its reserves when it declares dividend? So yes, because the section 123 says, as decided by board of directors, they can transfer. So there is no mandatory transferation. So as decided by board of directors, they can transfer. Then question number 3, when there is no profit, can a company declare dividend out of reserves? Yes, it is possible. Reserve rules has to be followed. 4 rules is there. So rate rule, withdrawal rule, usage rule, and balance rule. Then question number 4, can a company provides higher rate of depreciation than prescribed in schedule 2? Yes, higher rate of depreciation can be provided than prescribed in schedule 2, because schedule 2 is minimum, it's a minimum rate. Then question number 5, board fails to pay dividend warrants to the shareholder within prescribed time limit. Shareholder claim 20% rate of interest. No, as per section 127, shareholders can claim only 18% rate of interest. So 18% they can claim. Then question number 6, company declared dividend on 30/5/2016, paid on 15/6/2016. Is there any offence? No offence, because 30 days time is there. So but they are paid within 15 days, so no offence. Then question number 7, company adjusted the dividend against dues from shareholders. Is it a violation? As per section 127, when there is a due from the shareholder and if it's lawfully adjusted, there is no violation. If it's lawfully adjusted, then there is no violation. And question number 8, interest for non-payment of declared dividend, 18%. Question number 9, partly paid up share, whether company has a lien. See, as per table F, for a partly paid up share, the company has a lien in case the share is called under due money. So the money is due. For partly paid up share, if the money is due, the company has a lien. So the board of director can exercise a lien. So they can even withdraw the lien. That means on a good gesture, they can even not use that lien clause. But they have a lien. Partly paid up share, if the call money is due, then they have a lien. Question number 10, shareholder directed the company to pay the dividend directly to his bank account. Even though the company tried to deposit to his account, some technical error encountered, hence it's not paid. Whether section 127 penalty will come. See, shareholder has directed certain mode of payment. So certain mode they have told no. So this mode has not been followed. So for example, the mode has been followed, but only thing is the shareholder cannot be able to pay it because there is a technical error. So no violation on the part of directors because they try to honor, but the thing is they have to intimate to the shareholder that we try to do your honor your saying, but some problem encountered. So actually there is no violation prima facie, but they should have communicated. So you should have communicated the shareholder. What you should have communicated? You should have communicated that there is a we try to honor your instruction, but it cannot be done. So we are really sorry. You please tell us another way so that we can pay that it should have been communicated. Then 11th question. There was a dispute in dividend. So this dispute dividend not paid to the shareholder whether section 127 apply. No. Till the dispute is over, section 127 does not applicable. Question number 12. Default in public deposit, can company declare dividend? See, default in public deposit. No. Till the default is settled, the company cannot declare dividend. Question number 13. Last 3 years dividend rate 8%, 10%, 12%. Current year the company incurred loss. Interim dividend, the board wants to declare at 12%. See, as per the interim dividend rule, the average of 3 years, 8, 10 and 12 is only 11%. So the company can declare only 11%. They cannot declare 12%. This is the past examination question, RTP and practice model questions from dividend chapter. So we will go to the next chapter.